stage is set. All engines go. Welcome to the angle. Let's start the show. Hold on tight. The stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle. No time to delay. Markets rise and markets fall. Atomcash is ready to answer the call. While the bulls charge hard and the bears dig deep, the angle will keep you on your feet. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay. Cashing in on the highs and lows where the wind of fortune constantly blows. No looking back, keep your eyes on the prize. Fuel to run with a fire that never dies. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay.
Good morning, everyone, and welcome to the most entertaining, intellectually stimulating, educational, financial podcast in the entire world. This is the Atomcash Angle, the show that flips the switch and floods the system with straight financial voltage. I'm Adam Cash, and I'm bringing you the firepower that your financial life may have been missing. Now, whether you're new to trading or a trading savant, I aim to turn complexity into clarity with a shot of adrenaline. Now today, I've got an exhilarating lineup of segments to give you all as much information as quickly as possible as per usual. We're going to do some live trading and some market analysis for you guys today, but also today's a really big day. We're going to do an FOMC prep and outlook segment later today, and we're also going to do a little bit of a sneak peek on a Microsoft and a Meta earnings report. If you don't know, Microsoft and Meta are basically 10% of the SPY, and they're reporting today, so it's almost like SPY's reporting earnings after hours. So that's going to be very, very important, so we'll take a peek into that later on in the show today. It's been an interesting week to say the least, so we'll recap a little bit of what we're looking at this week thus far. Yesterday, we saw a little bit of bearish action in the overall market, but very plotting. And I talked about this over in our Discord community at Exclusive Trading. And essentially what we saw yesterday was volatility moved up a little bit, but after we had that move down, you saw volatility pull back down, and the market really didn't go much of anywhere, unfortunately. So you saw you saw the market drop off here. These are 5-minute candles on the SPY. And you saw volatility conversely also go up. Volatility rejected lower, and as a result, the market didn't necessarily rebound back. And this is why I tell you guys, volatility and the SPY don't necessarily have a one-to-one relationship. It's just basically the price disagreement or agreement. And as volatility stays low, after we get these moves one way or the other, you might get something like this. Now, I personally got caught up in this a little bit yesterday. I was expecting a little bit of a bigger rebound than what we got yesterday. And unfortunately, just volatility was just too low. We didn't get much of a bounce back and just kind of grinded lower. Now, we did have GDP this morning, and the market cared a little bit. But outside of that, not much really going on. It's a very, very quiet morning, and it's been quiet. I made a tweet. If you follow me on X, if you're watching on X, you probably saw it, but I put out a little message earlier this week. and I'll enunciate it here for you guys that are watching right now live, about volatility. And I was anticipating UVXY, which is something we track for volatility, to get pinned south of 15.5 pre-FOMC. And as you saw yesterday, the high of that was 1542. It's pre-FOMC, that's today. And in that time, that was it. Yesterday was the highest that we've seen so far. So I was anticipating UVXY to get pinned under 1550 pre-FOMC, which is today. Now, along with that, I was also anticipating VVIX to kind of sit around that 90 area, which it did bump up a little bit more, went up to 95, but mainly to watch VIX. Now, VIX. If VIX stays sub 17, I've said that we could see a move up to 17 to 17.5. Sorry, 17 to 17.75. If you get into that range with the VIX, it is still a buy the dip environment, meaning you could see some level of a pullback on the market, but the pullback will be short-lived if we get that kind of pop on the VIX. Now, if we break over that level, that would mean something a little bit different. And this is all on my X account, so you can follow me over there. It's at Atomcash. But I put this out for you guys to keep an eye on, just so you kind of understand where to keep your head at during the week, just following volatility as a whole. And as long as VIX stays sub that 17.75, which I know is a little bit of a rangy area, the market can sustain a drop and will rebound into next week. I'm very confident of that. But as long as volatility remains down here, as long as VVIX, which is a little bit higher than I anticipated, but as long as UVXY stays under 15.5, as long as VIX stays suppressed, ideally under 17, it's going to not only be a buy the dip environment, but day trading is going to be very hard and daily price action is going to be very slow on the indexes as a whole. Now, there was an exception to that with the Russell yesterday, just eating a awful, it was a bad day for the IWM for the Russell yesterday. Pretty decent red candle on the day there, but with the exception of that, price action is very, what I like to use the word plotting. It's slow, it's boring, right? It doesn't really go too much of anywhere. And SPY actually, like yesterday, was a really good example of that, where the bears got some decent momentum out the open there, and you just had 5-minute candles just dropping. But like I said, once you hit that peak where UVXY, it didn't really get to that 15.5 at that point, but it got to like that 1530 area before getting a little bit of a rejection there. You didn't really go much else. Like, there wasn't room to rebound. There wasn't anything else there because the market wasn't really in disagreement of price. It just said, yeah, price is going to sit down here. And that's essentially it. Now, part of that was fueled by Microsoft. And Microsoft gapped. Sorry. Let me change my words here. I guess it did technically gap up, but pushed hard at the open is what I was trying to say yesterday, and pushed back all the way down into the close, which was a big anchor on the market yesterday, which caused that little bit of a drawdown. Now, as I've expressed on this program, I am still short Microsoft into earnings. And this is very rare that I take a play into earnings, but it is a call credit spread. So essentially, I'm short a spread on Microsoft, which keeps my risk very balanced. Essentially, I've got I think it's 4-to-1 or 5-to-1 risk to return ratio. I'm basically risking for each spread about $50 to make approximately $200. Sorry, that's 4-to-1. So I'm risking $50 for every spread, but if it works out in my favor, I can make up to $200. So it's good risk to reward there into earnings, which is today. I could lose on that position. It's an earnings risk, but it's a calculated risk. So it's not me just buying directional calls or directional puts where you can have a pretty bad time, but it's me basically trying to short IV into the earnings, which is what you want to do with a credit spread, not a debit spread. So that means I'm short IV, which is good because earnings are going to more than likely drop the IV. And I'm directionally choosing sideways to down. Which I think is what we could see on Microsoft here. Now, obviously, they could blow it out of the water, pull in NVIDIA, and just go up more, and God bless them if they do. But a little bit of a healthy pullback, I wouldn't hate it. So, seeing yesterday some pre-ER jitters, could see that continue today. I guess we'll see as the market opens how that looks. Now, not to be overshadowed by anything else, but again, we do have FOMC today around 2 o'clock, so Powell's going to come out and say if they're going to raise, cut earnings, etc. We'll see. I am of the belief, and I've said this on the program before, that we're actually going to cut rates in August. Now, the market's pricing in a cut for September, or expecting a cut in September. I should say futures traders are betting on a cut in September. I'm of the mentality that we're actually going to see a cut next August. So not this FOMC meeting, but the next FOMC meeting. Now, what happens if we get a cut? Well, we've talked about this before on the program, but when a cut happens, you typically see a short-term pop in the markets, followed by an eventual bear move. Now, that's something that we'll talk about later if and when the time comes. But a cut typically is seen bullish, and I made a video up on my channel. If you haven't checked that out, go check it out. It's about what happens if Trump replaces Powell, which hopefully won't happen, or if Powell resigns, or if interest rates are cut too quickly, how that could affect the market. So with Powell in control, I'm pretty confident if and when he does cut, it would only be by 25 basis points, 0.25%. So it wouldn't be anything too extravagant where we'd have those negative side effects, but theoretically it would cause a bullish bump in the market. So we'll see about that later today. As it pertains to IWM, we are above the tattoo level. I'm now calling this the tattoo level in our Discord community. So the 223.32, I think I've said it on this program every single time I've gone live, but this level is so important. I'm calling it the tattoo level because you might as well tattoo it on your body. That's how important this level is. Above it's bullish, below it's bearish. It's that simple. Plain and cut and dry. You don't believe me? You can go back and look at every single day's price action. Typically, being above that stays bullish. Once you break it below that, we start to move a little bearish on the IWM. So we're opening right around that today, which is a spot you kind of want to be in on a FOMC day if we're in a neutral to rate cutting environment, because if we do get a surprise cut today, the sector that's going to react the most, or I should say the index that will react the most theoretically, would be the Russell 2000, and conversely IWM. So if there was a cut today, you would want to watch IWM for that kind of reaction. Now, guys, we only have 3 minutes till the market opens, so I like to do this twice a stream. I'm going to do it once right now. Wherever you're watching in the entire universe, whether you're on YouTube, X, or Instagram, do me a quick favor. Like the stream, subscribe, or follow me if you haven't done any of those yet. I only ask this twice a stream. I know it can be very annoying when you watch other people ask continuously over and over for your support, but I appreciate all of your eyes and ears watching me right now. We got 50 people watching. I know we normally bump up as the market opens, so I appreciate your support. And don't forget, once we get over to 500 subscribers over on my YouTube channel, this will be an everyday show. So if you like the content, please help me out just a little bit. Like, follow, share, subscribe, comment, say hi in the chat. I'll probably say hi back. Hey, Nigam, how you doing? See, just did that. He said hi in the chat. Or he actually said good morning, so good morning. But yeah, talk to me in the chat. I'll say hi back. Any sort of interactions, very much appreciated. And I appreciate your support as we try to grow this tiny little community into something a little bit bigger. Now, we got 2 minutes until the market opens. I'm going to check our catalyst watch here, as we like to do every single morning, just to make sure we're not missing anything into the market open. Like I said, we did have GDP pre-market. Market didn't really care. I mean, it cared, but not enough. But outside of that, you do a Bank of Canada rate decision at 9:45 that could cause a bump. Depending on what's expected is no change there. So watch that, because if they do cut or raise, whatever happens in Canada, that could spook or influence our market potentially on, because we have FOMC decision today as well, that could influence our decisions as well. So or at least what people expect could happen. So that's something you want to keep your eye on today. You do pending home sales at 10. So if you're someone in that kind of market, you want to keep an eye on that. Outside of that, Trump is signing a congressional bill at 1 o'clock that's new on the docket today, so there could be a bump in the road prior to the FOMC rate decision. Obviously, the FOMC decision is at 2, and then you have the conference at 2:30. The 2:30 matters more than 2 o'clock. Just keep that in mind. And then I already talked to you guys about Microsoft and Meta. We'll talk about that after hours, or I'm sorry, after we get into the market here. Those guys are reporting earnings after hours. You also have Qualcomm and Ford, and eBay is like the big ones to watch after hours today as we head deeper into earnings season. Get a better idea of what things are looking like here in the near term. Okay, we got about 30 seconds until the market opens. After the market opens, we'll watch this for a little bit here. Then we'll go into our sectors, kind of get an idea of what sectors are doing good, bad, and different today, and kind of make a decision there. Now, I said before, day trading the market right now, unless you're more aggressive one way or the other, is probably not going to be a good time. You're probably going to have a bad time day trading the market right now, so I'd be very cautious, especially today. We'll see if IV gets a bump up, which it should get a bump up into the market open today. But we'll check on that as time goes. Now, that does remind me, I have to check something. Also, I want to talk about NEO. We're going to talk about NEO here in a little bit, give you guys a little bit of an update on that one as well. And I also wanted to bring up Peloton, which is something I'm personally long on. Thought it'd be fun to talk about that as well. All right, market open here. A little bit of a dumper-rooney into the open first few seconds here. Let's check out our IV on at-the-money contract. So we'll look at the 636s right now. Yeah, obviously a little bit of elevated IV right now at the open, 23%. Now, typically, as we head into FOMC decisions, interest rates can move flat to slowly bump up into the FOMC meeting. The last one is a little odd. IV just stayed flat. Now, IV percentile right now, which you see up here in this corner, is 15.2%. So right now, on the by the open side, or in general, IV is higher than it normally is on the market. So just be very careful if you're buying to open any new contracts at this position. If you do, keep that in mind because you're going to want to see IV continue to climb. So you can, there's nothing wrong with that, and IV can climb. The only reason why I'm saying or anticipating IV not climbing into the FOMC meeting is I think it's pretty expected that today's FOMC meeting will be much of a nothing burger. I think much of the market's expecting a nothing burger, meaning no cut, no change, essentially. No cut, no raise, no nothing. It's just going to be a nothing burger. Obviously, what Powell says is going to matter a little bit more. But for that reason, I don't think we're going to see an IV bump up into FOMC. So sometimes we'll see IV pre-FOMC at like, we'll just use this number right here, like 25-ish%. And as we get into the closer to the end of the day, even though we're at 0 DTEs, this IV goes up. So you might see even at the money, if we're at 25%, it might go to 50, 60, 70, 80. Right, especially back when we were like around the tariff headlines when things were much more volatile. Volatility's so low right now that I don't really think we're going to see IV slowly climb. I was going to say crawl essentially into the meeting, but I do think it will stagnate. So you're going to want to watch this IV stay pretty flat, and we're talking about at the money 0 DTE IV stay pretty flat throughout the day, which would be my preferred method of what happens. We'll see. Into later in the day. We'll check back on that probably like 9:45, 10 o'clock. Okay, NEO. I want to talk about this real quick. Now we're getting into the area of the buying opportunity. As I mentioned on the video, right around here is the sweet spot. Right in this area. I'm not long NEO yet. I'm still, and people got really mad at me. You can go read my comments on that video. I got a lot of meme traders very upset because I said some things were interpreted a certain way, and I apparently rubbed a few people the wrong way. But hey, chart doesn't lie. Just it is what it is. And now we're getting into the area where we have a decent risk to reward on NEO. I don't want to rush into this just yet, but once we get under 448, basically between 448 to 421, if you could just risk 421 really, and you're only risking about 20-cent drawdown, at that point you're in an area which I want to see some level of a base build out here, and we're talking a swing. So I'm not talking about a day trade, I'm talking about a swing here. Where I actually want this to pull down a little bit more, basically get to this 437 area, kind of fluff around here for a bit, probably in the period of 1 to 2 weeks, if that, maybe even get a little bit of a bump up. That will show me a lot of confidence in this name, and I want to watch volume. So you see a big volume spike here as we went to the upside. Volume is decreasing as we're going down. It's actually a good sign. But I do want to see it get a little bit lower where I can get a pretty good risk to reward. Again, you can risk this 421.5 area, or really $4.21 as a decent stop. And if you want to give yourself a little bit more room, you can probably to like 406. So getting an entry, ideally around that 440-ish area, would give you only like a 20-cent drawdown, potentially 25 cent drawdown. And even if you get back to just 510, you're talking almost 20% gain versus a rough math in my head, 4% risk to the downside. So you're at a 5-to-1 risk to reward on NEO if you can get that entry around 440. So to all the people, and you might be watching live, you're one of those people who watched that NEO video and you were very upset with me because of the risk that I mentioned. Not that I'm bearish on NEO, but you think I was poo-pooing all over your meme stock. There's opportunity, and I'll tell you where the opportunity is. And that is the opportunity in my opinion. So if you like NEO, if you want to take a stab at NEO, that is where you're getting a great risk to reward on a risky trade, in my opinion. Take it as you leave, or take it as you want it, whatever. Do whatever you want with that. I don't care. Make some money, don't make some money, ignore me, whatever you want to do. Just my opinion. I do want to check on something real quick. Give me 1 second here. So I'm just checking on a few things, or a few open positions, because I do have to manage a few things into today. Nice. Okay, cool. A lot of things moving in my personal portfolio today. We'll check up on those later after the show. Nothing I have to necessarily rush into just yet. Let me see. Walmart's pushing up. I have this on the watch list down here to keep an eye on because I mentioned that I believe on the program I was looking for like a 100 tap, and we might actually get this. I think I mentioned it last week on the program that over 96.65, which is where I had the LOI. This is basically your make or break line. After that, it was going to push bullish, and now you've got 4 days so far in a row of green. I'm looking for this to break 99 today, ideally, and get a little bit higher. And at that point, I do have a spread open on this, so at that point, I'm going to look to take profit. So if I can get a little bit more momentum to the upside, I like that. And again, this is something I'm already long, so don't FOMO. Right now, SPY sitting below that 630, 615 area, looking like it's trying to get a little bit of a bump here as we push into the open. Let's check on the IV. IV is dropping a little, which is expected. It's market open, but I want to see basically IV do one of these where it comes down and goes back up into FOMC, or at least goes down and kind of stagnates. I don't really want to see IV drop lower than like 20. Because if IV drops lower than 20, we're only about 4 points higher than our IV percentile, which really tells me, and more than likely confirmed, that the market's thinking FOMC is going to be a total nothing burger, and I actually want a little bit more volatility to come into the market. However, the market's obeying me in terms of my volatility prediction. We're under where I said we would be on UVXY, which is a good thing. I want this to get pinned under 15.5 into FOMC, which so far we're staying under it. My VIX has not updated yet, which for some reason doesn't do that. Or has it updated? Hold on, let's see. No, it did update. VIX is at a sub 16. So again, as long as VIX stays under 17, everything's by the dip environment. Everything. Once it crosses 17.75, that's like your max threshold. So if we see a big drop on the market and the VIX is still sub 1775, it is still a by the dip environment. As long as volatility does not crack that, the market's still going to be by the dip environment completely. Now, timing matters, right? And obviously your positioning matters. It doesn't mean you want to offload or go full in on 0 DTE, so be smart about it. But at least in terms of perspective, you want to keep that in the back of your head. So if we do see volatility continue to just kind of mellow, especially after FOMC, and especially after tonight, which we're going to talk about that in a little bit with Microsoft and Meta, we will see the market more than likely start to grind up for its next leg. Now, as I've talked to you guys in this program before, how important IWM is. Wow, look at this back test today. Look at that. Off by a penny. Get this tattoo level on your chart. If you watch this program in this line, this one line, if there's one line you're going to put on any chart, it's IWM, and it's 223.32. Off by a penny, but pretty solid. There's one line you have on any chart anywhere. Even if you don't like technical analysis, put that one right there. That one right there. Put it on your chart right now. It's very important. If you don't believe me, look at that. And you can look at all the other days it interacts with it. It's very important. Just saying. Anyway, as I've talked about in the program before, IWM is going to be your gasoline-soaked dry wood to throw into the inferno that is the stock market. So depending on how FOMC looks, depending on how the ERs look after hours today, we will have a better idea of how we're leaning. Microsoft right now, 3 red days in a row, like I mentioned before, and we'll talk about this in the segment coming up in a little bit. I am bearish into Microsoft earnings, so we'll see that. Also, I just noticed I never have Meta on here for some reason. Talk about my Mag 6, and for some reason I don't add Meta. My bad. It only took me like a month to realize. Peloton had a nice little bump up. They had an earnings upgrade into the open. This 7 area, so if you trade Peloton or you want a stock to watch, if Peloton can crack 7 with some sense of continuance, with volatility, with volume, this thing's going to go. It is going to go if it can sustain over 7. It's really simple. 7 and over 719. Really, this area right here, the 738, is what you really want to keep an eye on. You got the 200 MA there. It is a pretty key level. Getting over that, though, will flip it on many different time frames bullish. So Peloton's a really interesting one right now. They do have earnings coming up on the 7th, so just be mindful of that. But the way this is set up right now, it is a powder keg on the daily, on the weekly, and on the monthly. This thing is a powder keg ready to go off. If there's a spark, it will. And today got a little bit of a spark with a little bit of an analyst upgrade. But bears are going to hold this thing down more than likely until earnings, so I don't really anticipate it getting a run until earnings, but I've been wrong before, so maybe I'll be wrong in my favor. Neo holding the lows for now. I do want to keep this one on my watch today because I may open up a new position in Neo on the program while we're live. So we'll keep an eye on that. Good morning, Good morning, Orca. Thanks for coming and hanging out with us. Appreciate you. Let's go look at our segments here momentarily. Let me just make sure. Okay, let's check out our segments real quick. Or our sectors, I should say, not our segments. All right, utilities moving up here, while energy is moving down. Consumer staples, kind of flat. Tech, kind of flat. Tech is probably going to be choppy today. A lot of repositioning. So you may actually see some rotation, for example, out of Microsoft or out of Meta and into other tech names, right? So some people that want to take the risk off from the ER, but they don't necessarily want to take risk off from growth or tech. You could see rotation out of, for example, Meta and Microsoft and maybe into a Google or into an Apple where they don't necessarily want the ER exposure, but they don't want to run from tech growth names. So I would expect the XOK to stay a wash. It would be stagnant today, in my opinion. We'll see. Real estate, pretty flat, which I believe we have that 9:45. No, home sales are at 10, so watch XLRE around 10 o'clock. Same with materials here, down a little bit right now. Actually, pretty decently down, all things considered. Yesterday was actually showing a little bit of strength comparatively to everything else. XLI, pretty flat. Healthcare, pretty flat. Financials, pretty flat. Discretionary, flat. Comm services flat. So really interesting to see two defensive sectors kind of iffy, right? So you see utilities up, you see energy down. It's a little iffy. Other than that, with the exception of materials, mixed bag. Green, red, I like to call it a Christmas tree when you have green and red all across the sectors. So that's going to back up a risk off day in conjunction with volatility sitting where it should be right now. Price action on the overall market is probably going to look like this. Unless we break it past 10 o'clock, you're probably going to stay sub 636.15 until 2 at this point. You're going to stay this dollar range essentially. 634.21, 636.15 unless this breaks pre 10 o'clock. Then you're probably going to stay ping-ponging around in here. I wouldn't expect something too crazy unless you see a Russell rally, which could happen. You could see a Russell rally. Wow, did we tap into the penny there? Ooh, we tapped it to the penny there. Have faith in the 223.32. The tattoo level on the IWM strikes again. Intraday, second tap. This one actually legit tapped it to the penny. Again, keep this on your chart. This is the only level that matters for small caps. Russell, if you trade any Russell small cap stock, this is the level you got to watch. That's it. I'm telling you, above it, bullish, beneath it, bearish. Cut and dry. Very simple. Volatility, or VIX sub 16. VVIX a little bit higher than I want it to be. But I guess it makes sense with going into FOMC. So again, VVIX is the volatility of volatility. How volatile is volatility as a whole? So what are the odds that volatility, if it goes up, will come back down, or volatility, if it goes down, will come back up? So seeing VVIX elevate a bit does make a little bit of sense as a whole, and seeing it elevate yesterday does make sense because we saw volatility come up yesterday and come crashing back down intraday. So seeing VVIX elevated yesterday does make a lot of sense because we saw volatility reverse. How volatile is volatility? It happened yesterday. So actually seeing this elevated does make a little bit more sense than not, I guess, overall. Because it did go up, come down, go back up again. So it was volatility was volatile yesterday. Let's look at our NVIDIA. Yesterday made a new all-time high. Currently sitting just shy underneath that. Watch, obviously, that 180 area on NVIDIA. Whole numbers, anything like that with stocks like this. Psychological level, people like to sell there. So watch 180 on NVIDIA as we push forward into their earnings on the 27th. Meta today, again, they have earnings after hours. I do not like this daily setup here. Just looking at the candles. If you're a bull on Meta going into earnings, what's the low a day on this? Low a day, 699.60. Yeah. POC is at 698.68. So you're going to make a lot of sense for Meta bulls to want to hold that low a day. So if you're a bull or you want to be a bull going into Meta ER, basically you want to hold over 700. You want to hold the low. Break under that low. It could get a little scary for you on Meta going into their earnings after hours today. All right, Bank of Canada rate decision came in as expected, so expect basically a nothing burger reaction. Let's check the market. Okay, upside reaction. I'm okay with that. We're not mad. Let's see. Rise in underlying inflation largely reflects increase in prices in goods other than energy. That's not necessarily good. But we are making a new high a day on SPY right now. Let's check our volatility. Our IV is still dropping on the market. So we're going to want to keep an eye on that for right now. Bank of Canada monetary policy does not provide economic forecasts, cites uncertainty generated by U.S. tariffs. Remember, Canada and China are the only two countries that really we haven't been able to bang out a trade deal with, essentially. They're the only ones that are really sticking it to us, I guess would be the best phrase to use. So that kind of uncertainty could shake the Canadian economy and also the U.S. economy. Rejecting that key level right now. Look at that. Candle closed on it, candle opened on it, and now kind of just sitting around it. Bank of Canada says a risk of severe and escalating global trade conflict has diminished since April, aka taco. The market does not care about tariffs. I will continue to say it. The market does not care about tariffs. It doesn't care. It doesn't care anymore. It's not important. No one cares. No one's scared. Doesn't care. I'm reading all these Bank of Canada comments as they come in. In Bank of Canada's current tariff scenario, GDP grows by about 1% in the second half of 2025, then picks up, hitting 1.8% in 2027. Inflation stays close to 2% over the scenario horizon. That's pretty good for the Canadian economy, which very close to our economy. Man, these comments are just pouring in right now. Bank of Canada releases a current tariff scenario as well as two alternative scenarios, one with increased and another with decreased tariffs. Okay. So either way, they're preparing for tariffs, which it's going to happen. We're going to come to some sort of eventual agreement. And honestly, not a political take, but everyone's going to, you and me, everyone else is just going to eat the cost. Canadians are going to eat the cost. Americans are going to eat the cost. No one's going to win, ultimately. If you have a different opinion, feel free to let me know in the chat. But so far, we're just eating the cost. Now, we're getting a little bit of volatility as these comments continue to roll in. So just keep that in mind. Okay. Senior advisor from the White House says GDP data shows strong growth. We're getting a lot of talking right now. Make sure you're using a news aggregate when you're trading. If you don't, it's very good to have one because that way you're not surprised by anything that comes your way, especially if you have open positions. Not a fun time when you get a little bit of a surprise while you're just going about your business. You want to make sure you get your eyes on everything so you can close out, especially if you're in a day trade. You can realize gains or realize a loss if something goes against you. Nvidia is starting to push here, looking pretty good. Let's see if my thesis may play out here, where I'm theorizing, not necessarily that we're going to see a bearish day on Meta and Microsoft. Well, I am more bearish on Microsoft, but kind of like a sideways day as some money actually rotates out of these two companies and into a company like Nvidia, a company like Google, even Apple, which is down right now. But we actually see money rotate between the XLK. Money just moving around the same sector, which is what I kind of want to see. Overall, though, our Mag 6 is pretty flat, with Nvidia leading the pack considerably, up 1.25% and near a new all-time high. You're going to want to watch 179.38 and obviously 180 on Nvidia heading into the rest of the day. Okay. Well, let's see if we tap it again. Will we tap? Will we break it? Will the bulls hold it? Oh, no, we might break it. Be careful on small caps. We might break it. Or the bulls are going to step in and leave a nice wick. We're on the tattoo level, as I like to call it, on IWM right now. And bulls closed above it, but it ain't out of the woods yet. Keep an eye. They don't want candles to close under this level. Reverse, it's on. You could scalp, if you really want to be an aggressive scalper, you could scalp this over and over and over. I'm telling you. It will break eventually. You saw yesterday it broke. So this level does break, but if you're taking risk to reward stabs, good risk to reward. And you can also flip bear if it breaks and confirms break. Microsoft getting a little bit more bearish. All right, so let's roll into our FOMC prep. which I already kind of alluded to, so I won't take too much time talking about it. But I do think it's a good idea to talk about FOMC in general. I know a lot of people will take a lot of risk on a day like today, and then they cry when they blow up their portfolio and they make big boo-boos. So I'm here to prevent you from making big boo-boos. Now, typically on FOMC day, there tends to be a lot of volatility, especially around that 2 to 3:30 time frame. And typically, a lot of people try to catch a really big fish. They try to take a 0 DTE trade on high IV, and all the other fools are out there pumping options and whatever. And most of the time, it doesn't bear much fruit. And especially now, where we're sitting on the market where volatility is much lower, as I've had a whole discussion about that earlier in the program. Volatility is so much lower right now that your ability to make money, unless there's a surprise, which there could be a surprise, but again, that's just gambling at that point. Your ability to make money on a short-term option during FOMC today, it's going to be a little bit more limited. Now, again, I'm not trying to steer you wrong, say you can't do it. Of course you can. You can make money any day at any second. But we'd like to talk about risk on this program. So I'm not saying things are bearish, things are bullish, things you should or shouldn't do. I just want you to consider the risk behind what you do. Now, heading into the end of the day today, not only do you have that FOMC announcement, not only do you have Powell speaking, but again, you also have Microsoft and Meta reporting, which can definitely affect the market into the end of the day, which should give you a little bit of unforeseen bullishness or bearishness. Kind of depends on which way the market wants to take things. I personally don't like to take binary bets. I don't like to take a bet on a binary event on something that is unknown unless there's a really solid risk to reward. For example, I'm short on Microsoft right now, as I've said, via call credit spread, with a 4-to-1 risk to reward scenario. Good risk to reward. I'm not blindly throwing money into an ER, but I put $50 per spread or whatever. Could make 200 at most, but most I'm going to lose is 50. It's a pretty solid bet, right? But when you're looking at like day trading the market today, and if you see, again, where volatility is sitting, where it has been sitting, and how price action has been, unless you live under a rock, or maybe you're not a day trader, which is fine, the follow-through in general is not there. This is summertime trading at its best, where the market just kind of does this. And then sometimes we get a whoop, and sometimes we get a whoop, and then it goes back to it flatlines, right? So, again, unless we have some sort of surprise, you're probably going to have a very bad time. So for my FOMC prep, what I would suggest you consider is, if you're someone who can't really control your emotions, if you're someone who really wants to day trade, you have all this buying power burning a hole in your portfolio and you have to spend it today, close out the brokerage app, delete it from your phone, you can download it later, walk away from the computer, go outside, play with your dog, whatever. Don't look at charts today. Just come back tomorrow, right? There's so much power, and we know enough people talk about this online, but there's so much power in the ability to simply walk away from a trade or simply walk away from the market. You can not do anything, and guess what? You may be in a better position than you would have if you did something. There's no better feeling than that, because mainly, what if you sat there, you spent a lot of money, you lost money, and not only did you lose money, but you lost time. Now, this is the only job, only hobby, only thing you could really do in the world where you could aggressively make a lot of money or lose a lot of money, and also time. So if the risk to reward is poor, why would you take the risk, right? So what I would suggest you consider, if that buying power is really burning a hole in your pocket, take a step away, because some FOMC events, you can make money. I've traded FOMC before. I've alerted trades in our Discord, of course, when the opportunity is there, when the opportunity makes sense. Maybe it's a strangle trade, maybe it's a directional call or put, in and out, 30-second trade, whatever, but it really isn't there today because of where volatility is. Now, unless volatility climbs, IV on your 0 TTEs climbs, and we also see some level of a surprise, that would be a good environment to day trade. We could trade technicals. Now, keep in mind, if Powell's talking, that could screw things up for you either which way. But that would be something I would be interested in. However, I'm anticipating that not to happen. I'm anticipating the VIX to say sub 1775. I'm anticipating UVXY to get pinned sub 1550 until FOMC. And if it's those two parameters exist, I'm not trading FOMC because there's not enough volatility as a day trader for me to make money. Now, that sounds a little silly, right? There's not enough volatility for you to make money. What do you mean? Well, especially if I'm trading a shorter term option, I need quick price movement. right? If I'm an options trader, I need to get in and out. I need things to go up or down as quickly as I can to make my money, especially on a 0 day, right? I need to get in and out quick. I need my trade to work. If there's no volatility in the market, then I might just be stuck holding a bag. And you don't want that. Now, if you're on the sell side of options, that's a different conversation. But if you're on the buy side of options, which most of you are, that's a bad time, right? And you don't want to have a bad time. Most importantly, and not enough people talk about this either, is your mental capital, right? You don't want to have a bad day that affects, or you don't want to make a bad trade, even if you're losing $5. You don't want to make a bad trade that affects your confidence or your ability to execute, right? Sometimes it's not even about the money. It's more about feeling stupid, right? You're disappointed in yourself. You're a little upset. These things happen. It's human emotion. As much as we talk about not having emotions when you trade and whatever, I think it's more important to look at regulating emotions, right? It's inhuman to say not have emotions. You're going to react when things go up, when things go down, happy, sad, and different. But it's more about controlling those feelings. So I think if you're able to have that self-control, you'll probably do very well. And it's really important to have that self-control when it comes to trading or not trading, right? There's going to be times where you're going to want to trade, and there's going to be times where it's not a good idea to trade. As I like to say, it's stepping on the gas versus stepping on the brakes. And today, in my opinion, is a step on the brakes kind of day, where I'm not looking to floor it. I'm just looking to see what happens. And I can take a position if the opportunity presents itself, or I can do nothing and be just fine because I didn't lose money and I didn't gain money. I want to be here the next month, the next year, the next 10 years, the next 20 years, right? I want to be able to trade. I want to be able to continue doing this. I will not be able to do that if every single day I'm ramming my foot down on the gas pedal like I'm in a Ferrari going 200 miles on the highway. Guess what? Eventually I'm going to hit a wall, a car, a boat, a fish, whatever. A fish, yeah, sure. I'm going to hit something and I'm going to die, right? Because you can only go so fast for so long. So if you're able to control your speed and you're able to slow down and speed up, switch gears, as I like to say, you're able to know when to scalp, when to go long, when to swing. Being able to control that will give you a lot of freedom. And today is one of those days based off everything that's going on. I made a little tweet about it when I promoted the show. We have a lot of abbreviations today, right? A heavy abbreviation day. Here's a great rule of thumb. Put this on your computer, on your phone, whatever. A heavy abbreviation day typically means you want to hit the gas or hit the brakes. What's an abbreviation day? GDP, FOMC, MSFT, META, ER. Right? GDP, FOMC, Microsoft, Meta, earnings. 5 abbreviations. If you have a heavy abbreviation day, you probably want to take a step back. At least that's what I would say most retail traders should do. And that's where I found the most success is when I see a bunch of abbreviations to go, I know what all those mean. Should probably not get too crazy because all of those abbreviations typically indicate volatility in one way. And I mean volatility in the sense of unpredictability, not volatility in the literal sense of like the VIX. But I don't want to trade an unpredictable market. I want to trade a predictable market. As a technical trader or someone who uses technical analysis very importantly in my trading, I want the market to obey my levels, right? I want to do what I expect it to do. Look at IWM. I want it to do this when it tests a key level, right? I want it to do what I think it's going to do. When we venture into unpredictable, when we throw wrenches into what works for me, my system, I don't want to touch it because the system may break. The system may not work as it should work. Yesterday, I even took a trade. I took a loss yesterday. I took a trade, and I took a trade on SPY. I took a call debit spread, and it's a trade I take 10 out of 10 times, right? Here, I can even show you. I got in somewhere around here. Yeah, somewhere around here-ish. And it's a trade I take 10 out of 10 times. It would always work for me theoretically. But what I didn't calculate into my risk equation here is that volatility just wasn't playing ball, so to speak, and I needed volatility to be higher to get a bit of a rebound to get back in this range, which is what my price target was, theoretically. So I ended up taking a loss on that trade. It just didn't work out. But normally, with my system, right, with what I normally do, that's a trade I take 10 out of 10 times, so I'm not mad at it. It was just an oversight on my part where I didn't acknowledge everything that I should have, right? So I made a mistake. It happens. But that's kind of what I'm saying. When you have a wider breadth of mistakes you could make or unpredictability, again, with abbreviations, then you probably want to take a back seat in general. Now, you do you, obviously. You do whatever you want. You see a good trade, by all means, take it, do whatever you want. I'm just saying from a risk standpoint, if you do decide to trade, perhaps maybe use smaller size, buy more time if you're an options trader. Just don't take on as much risk as you normally would, because in those events where you have unpredictability, you can actually make more money with less money. So for example, let's say your normal size is $100. Let's say you try to shoot for a 10% gain, right? So when you make 10%, let's say you close your trade, you made $110, or your total take home is $110, you made $10, right? Theoretically, and this is a big example, if you're expecting wild price action to happen or unpredictable price action, maybe you take the same trade, and this isn't really feasible, but just follow me here, with $10 because you're expecting 100% return. Now, that's a much more drastic return, but you're putting less money at risk to still make the same amount of money. You're still making $10. In both scenarios, you make $10, but you're taking less capital risk on the second scenario to account for the increase in volatility in terms of unpredictability. That moving from 10 to 20 bucks still makes you the same $10, but you take much, much, much smaller risk from a capital perspective. Things to chew on, things to think about. So that was what I wanted to talk about from a risk perspective as it pertains to FOMC today, because I know a lot of people tend to go on tilt today. So if I can say a few things that may prevent you from going on tilt, prevent you from over risking, making mistakes, etc., then I want to say those things. That way you feel more prepared to mentally handle the day and you don't make a mistake you may regret. So hopefully you found something in that. Even if it reaffirms your strategy, even if it reaffirms what you're already doing, then I'd be more than happy to help reaffirm what you're doing is correct. So hopefully that helps you throughout the day today. All right. Now I do want to do, and I'll give you guys a little bit of a sneak peek here. We're going to bring up, I'm going to let you guys know because I didn't announce this publicly, but if you're watching live now, we'll talk about it. We're going to do some new segments. Now I have a show scheduled tomorrow and Friday, both at 9:15. We're going to do some new segments. So tomorrow, we've got two new segments. One called This Week in Dumb Money, which we're going to look at people making mistakes, not to humiliate them, but to use them as a learning opportunity. One of my biggest benefits I like to say that I can provide the people in our community, and even you guys watching at home, is to learn from the errors I have made. That way you don't make the errors. Trading has a big, steep learning curve. So if we can lessen the learning curve by learning from other people's mistakes, and that just goes in history with anything, right? If you can learn from people who've made mistakes and not make their mistakes, then your learning curve is dramatically decreased. And that's kind of what I want to do with this segment called This Week in Dumb Money, where if you look at people making some mistakes, and again, not to humiliate or insult them, but more to look at how to prevent some mistakes and kind of look at why certain things happen. So I actually am really excited for that segment because I think it's going to hit home with a lot of people, especially some of the things I actually have one person who did a really good job, and I'm going to say why it's bad to do what they did. So they actually they did a phenomenal job. I'm going to say why you maybe shouldn't do that. And then a newer segment, they're both new, called Earnings Rewind. So this is specifically for Microsoft. We're going to look at the earnings from yesterday, which is today, for tomorrow's show, and rewind it. So we're going to look at what they said, what was done, and kind of look at things in 2020 hindsight, and kind of see how things could have been different for the company, for the stock, from a technical level, pre-earnings, and then kind of see a little bit of a recap of what was said during their earnings call and how it can project into the future. So for those of you that long Microsoft in general, which again, to be clear, my short on Microsoft doesn't mean I think they're going to zero, right? It's just a pullback. If you are long Microsoft, you think Microsoft's going to do well in the future, we're going to look at the earnings. We're going to rewind it. We're going to see what is said during the earnings. That would be more of a bullish prospect, or what could be something to look at into the future. Actually, we can look at bear things too. Maybe they say something on their earnings that's really bad, and we can find out why. So that's Earnings Rewinds. That's tomorrow. I'm very excited for that segment as well. All right, it's 10:05, guys. Do me a quick favor if you haven't already. It's the second time I'm going to ask you during the stream, wherever you're watching in the entire galaxy, whether you're on YouTube, Instagram, or X. And by the way, we're going to be on Kick soon. So if you like Kick, we'll be there. And maybe even TikTok, which I'm sure is going to bring in the highest quality of people. But wherever you're watching, do me a quick favor. Drop a like on the stream. retweet it, comment, post, subscribe, favorite it, whatever. Just interact any way you can. I greatly appreciate it. Again, I'm a very small fish in a very big pond. I appreciate your 2 ears and your 2 eyes watching me this morning. Any little bit of support, the algorithm appreciates very much, and so do I as a result. And don't forget, when we get to 500 subscribers on the YouTube channel, which right now we're at 116, so we're slowly climbing. Once we get to 500 subscribers on the YouTube channel, this will be an everyday show. So if you like the content, you like what I have to say, and if it's helping you out, maybe share it with a friend, have them subscribe. Goes a long way for me. Thank you very much. Alrighty. Let's take a look around, see if anything's changed. Like I said, I'm anticipating today to be quite a bore. Not going to lie to you. You guys know what you're looking at on volatility. VVIX flat. Volatility pretty flat. NVIDIA is looking like where the strength is. So if I'm speculating once again, I would speculate money rotating out of Microsoft and Meta from a de-risking standpoint. So not necessarily people are bearish, but people are just taking risk off the table, either realizing profits or just being a little bit more careful. And they're flooding their money into NVIDIA today, clearly, as a means of staying defensive while staying offensive. Meaning they're staying defensive from the earnings, but they're staying offensive with NVIDIA. So what I'd like to see, to speculate, if this theory is true, let's pretend Meta and Microsoft blow it out of the water. They have fantastic earnings. Watch after hours to see if NVIDIA actually drops as a result. Now, typically when you have a really good positive ER, especially in the same space with like the Mag 7, they tend to all move up in some way because they typically are all related, right? Meta may say that they're using NVIDIA chips or whatever, so may Microsoft, whatever, right? They may have some sort of business deal, or it may show that it could, based on what they say, influence NVIDIA's business. But what I'm saying here is, if people are being defensive and they're taking money off the table on Microsoft and Meta, would we see, as a result, if Meta and Microsoft perform, money come back out of NVIDIA right away, after hours to go back into Meta and Microsoft once that ER risk is off the table a little bit, right? So that's what I'm speculating we could see here on NVIDIA today, just judging on this price action we're seeing between these three companies, because these are flat, very flat, and NVIDIA is moving pretty solid. You're almost up 1.5% today, almost 3 points, and you're only a buck away from all-time highs. So it's very interesting to see this kind of relationship today. And sometimes on this program, I'll just talk to you guys and say, it may not even be a trade, but these are things that you learn in time, right? And that's why I share them with you, so hopefully you can take advantage of what I'm saying here and replicate it down the line. These are the kinds of trends you want to notice as a possibility, because let's say you think that's going to happen, right? And you think, if you're bearish on Microsoft, like I am through earnings, or if you're bearish on Meta, no position, through earnings, then maybe you stay in NVIDIA, right? You say NVIDIA, you maybe even say bullish on NVIDIA. But let's say you're bullish on Meta and you're bullish on Microsoft through earnings. Maybe you take a stab on an NVIDIA put at, right risk and whatever. You have some level of a short position if you believe that theory could be true. It's just something to consider, right? And these are just patterns I want you to recognize. That's about it, though. Google, pretty flat here, sitting at the 0.786 retracement. Apple. When are their earnings? Oh, their earnings are tomorrow. I thought it was next week. Apple earnings are tomorrow. Whoops, I thought it was next Thursday. It's this Thursday. Interesting. So Apple's implied move is roughly about $7. So if we sit here, 210, 217, and the other way would be 203. It's if it closes around 210, you got a very interesting move here. You're looking at a range of 203 to 217 on Apple's implied move, at least how options are sitting right now. That can change tomorrow, but that's kind of where we're sitting there on Apple. Tesla's very interesting lately. Like I said, I'm not bullish on Tesla unless it cracks 360. In fact, I believe it's going to come all the way down here. That's where I become a bull. Under 220. Between 217.76 and 212.64. Sorry if that hurts your feelings if you're a bull. I could be wrong. That's where the risk reward makes sense on the trade. Otherwise, I don't want to touch Tesla at all, period. It's looking a little overextended on the monthly. It's looking a little overextended on the weekly. It's very coiled here on the daily, and earnings really didn't break it either way. I mean, it did, drop, but it's kind of sitting in the middle of this range here. And you're sitting on the 0.382 retracement. It's just a no touch for me, no play either which way. But it is something to keep on your radar if we do get down here, that's where I want to long Tesla. It's got to chop off about $100. I know, big bad bear, but hey, it's not that I'm bearish. It's that's where the risk to reward makes sense. As I'll continue to say, not bullish, not bearish. It's where the risk to reward makes sense. We want to make good ROI. That's all that matters. Neo back down. Again, keep an eye on this one. This basically 430 to 437 is where I'd want to consider an entry here on Neo. Decent rejection on Walmart. Oof, look at that. Ugly. Ugly, ugly, ugly. SPY's just flat. I don't know if I can make this more entertaining for you guys. I'm trying to think of fun, interesting things to say, but I hate doing live streams. That's why I was really speculating even if I wanted to do one this week, because I had a feeling price action was going to be like this. I probably was going to take a live trade because price action is so dull. But maybe we'll just look at a few names. Maybe I'll run my screener and we can look at a few different names, or we can look at some names I've looked at recently. Oh, let's talk about a few names I've looked at recently. Let's do that. That'll be fun. GameStop. We talked about it on the program before. We're getting to the point where I'm debating a stab on GameStop. I've got basically 3 areas of support. You can use this range here of 2186 to 2213. Currently trading 2258. We did get a little bit lower today. Lower days at 2239. So getting around this range here, it is looking pretty bearish. I mean, it is 1, 2, 3, 4, 5, 6 red candles in a row on the daily. The weekly is starting to get a little burnt out. And the monthly looks like it could pull lower. So it's not risk without reward by any means. But if I can get an entry on GameStop, basically sub low of day, under 2239, you could consider a stop basically on the low of this ER candle here, which is 2154. So at that point, you're risking $1. So about a 5% downside on GameStop. And if you're patient, obviously playing for the gap fill here, so $30. So you're paying 5% downside for 50% upside. So 10 to 1 risk to reward. With the right entry, solid if you're patient. So that's something I'm interested in, but again, not without the right entry. Or I can keep a very tight stop on GameStop and kind of just let it do its thing. Not really babysit it. Talked about Peloton earlier. Right now, basically forming a big old doji on the day. Doji candle. Respecting, look at this, the 200 MA on the 1 minute. Interacted so far and respecting. So we'll see if that continues or not. Very interesting price action. Rivian's being turd. Unfortunately, SoundHound's been a bit of a turd into their earnings. This is where they really need to hold it together. You got the 50 MA and the 200 MA on the daily here. Bulls got to keep it together. I have a stop on my shares at around 1022, I believe. And they're green. I got in at like 9 or something. So that's where I'm going to pull the ripcord. If it fails 1022, I'm out of this. Earnings are, I believe that's next week, right? Next Thursday. So hopefully the Bulls can get it above 1094, and just even if they fart around here for a little bit into their earnings. And then obviously earnings going to be a bit of a gamble, so keep that in mind. But that's something I'm watching here on SoundHound very closely. We're almost at risk. Talked about IWM. Nothing else there. Ooh, UNH. Hot one, right? Yesterday I got two put positions. Positions on UNH for day trades that worked out very nicely. And you're currently sitting around this 260, 250, right? I believe I said on this program maybe a month or two ago when it was over here, when everyone and their dog wanted to long UNH at such a steep discount, blah, blah, blah. And I said to you guys, and I'll remind you, I'm not touching this until it gets basically to 220. Yeah, I put 220.12. That's where my alert's set. That's where I want to start buying. Because I'm looking for this monthly 200 MA tap, which last time it interacted was all the way down here in 2013, 12 years ago. And since then, right? Now, obviously, that's one line on a chart. Not a big deal. But where, again, the risk to reward makes sense is at around this 220 area. You also have, look at this green dotted line here. That's your POC, point of control, where the most volume is traded in a certain time frame. And guess what? This time frame goes all the way back to 2017. 8 years. That level is 226.11. So I want to take a stab somewhere in that area where 230 to 220. Now I can go along there. And I can look at the 200 as a stop, which is 209.20. So even if you put a stop at 199. Now, worst case scenario, it could sweep this candle here, this wick here, on this monthly candle on, basically it was the COVID candle, 220, or sorry, 331, 2020, could get that low swept. That is a possibility. So depending on your risk profile, you may want to consider that as a possibility. But I do believe you're going to see this low break, this 248.88 break on UNH, and I do believe you're going to pull lower. I think the opportunity is there if you're patient. I wouldn't go much further than that. And to be clear, that localized low is 247.13. That's your 52-week low. But I'm watching this 248.88. It's a little bit higher than that as a sign that we're actually going to go even lower on UNH. So I know a lot of you probably are involved in UNH or just have an interest in UNH. That's what I'm looking at here on the chart for UNH, for the opportunity and where the opportunity lies, because at that point you're getting an entry at that 220 area or even 200. Easy if you're patient. 100% gain eventually. At least that's how I look at it. So for your consideration. Let's go back and look at Grab. This is one I talked about on the program. We broke that downtrend. We're sitting and consolidating above that downtrend. So this orange line is this downtrend we broke. And currently, they have earnings after hours today. So this is actually as good of a setup as you're going to get into an earnings. Essentially, you broke a strong downtrend. You broke a flat top breakout here, essentially. The weekly's ready to go. The daily, it could be a little burnt out, but I can call this consolidation ultimately. And the monthly's ready to go. So Grab after hours today is going to be a big watch. I believe I said it before, but you're going to want to watch this range here. 552, 591. Through this thing melts. Once it gets over that area, which basically is the high of this candle, which is 572, this thing has the ability to melt, like double in value, melt, like go to 10. So this is one you definitely want to keep on watch after hours today. If they can get some solid bullish news, this could be a good mover. Snapchat is a name that I'm currently long right now, and I'll be honest, I'm underwater on it on an options play. They have earnings coming up on 8/5. There are a lot of people taking bull positions on Snapchat, and it keeps going down, which I find interesting. But if you're someone who looks at like options flow or whatever, there are a lot of people taking a bull position on Snapchat, which I find very curious. T-Burn says, "What's your thesis on the Snap swing?" Essentially, it's an earnings play, and it pulled back a little bit more than I wanted it to. I really wanted it to sit comfy at like 950, where I was speculating we could draw back to 950, sub the 200 MA on the daily, but still kind of sitting around this general area, 950. So it's possible we wick lower and then close above here like this week. So that's what I ideally want to make the trade still pretty valid. But 950 is kind of like the low I want to hold into earnings, which wouldn't be the worst thing in the world because you're kind of cooling off before the earnings, which is on the 5th, so next week. So that'd be ideal. Now, getting that 950 to hold, if we get follow through on earnings over the 200 on the daily, this thing could really pop. Like this thing could move at least to north of 10, or I'm sorry, north of 11 here on Snapchat. I want to look for basically just shy of 11. Like this area right here, this is your POC here on the weekly at 1087. So 1087 to 11. If 11 breaks, you're more than likely going to push all the way to 1305, which is a big move, all things considered, if you're sitting right here at 930. Now, obviously, it's an earnings trade, so it's a little bit risky. But from what I'm seeing from a flow perspective, which I'm not a big options flow kind of guy, but I do take it with a grain of salt as in conjunction with my technical trading, this is looking like we had a bearish move. We consolidated, built some level of a base. Bulls reversed, pushed up, tested the 200, which is a big level to test. Getting a retracement here, a cool down into earnings. Like I said, if we can get over 950, this is a solid risk to reward bet for an upside push into earnings. And Snapchat's a funny one when they report. Sometimes, right when they report after hours, they'll push up or push down very violently, and then they kind of grind one way or the other. And you can look back at their earnings. They sometimes have that kind of move, or they open and then just kind of fall or rise, which sounds really fooey for me to say out loud because, it's going to go up or down. But their earnings tend to be pretty volatile. And as you can see, basically, if you look at the daily, This 200 MA has been a thorn in its side essentially since this island top here a year ago, right? Rejection, rejection, rejection. And now another rejection. So if this is the time for it to break after it's built some level of a base, bulls have stepped in a bit. This is where a calculated risk here makes sense to me, to take the long on Snapchat through an earnings play, which is not something I like to do. It's not. I don't typically play earnings, but with the right risk, it could work out very nicely. So there's obviously a binary risk with an earnings play, and ideally, I wanted this to work out before earnings. Ideally, I wanted this to power through the 200 and break 11 and kind of get up here before earnings, but I was looking at 950 to hold, so right now we're a little bit beneath that. I have time on my play, so I'm going to wait a little bit, but kind of waiting to see if it can recover this 950 by the end of the week. If not, I might de-risk into earnings just to not take additional risk if it can't hold that general area, which it's trying to do today, or trying to leave a wick and push back up to the upside. Let's check on the market, see if anything changed. I just saw a little bump there. We are at high of the day again. So let's bump back to this watch list. See if SPY can get a push here. Let me check if we had news. It's 10:21, so nothing should have rolled out. Let's see. Chinese Commerce Minister meets executives from Boeing and Apple. That's possible. And you also have the Bank of Canada's press conference starting at 10:30. So commentary from that could affect the market. We saw a little bit of volatility come through on, or off of, I should say, that Bank of Canada rate statement, which was a little bit more than I anticipated, to be honest with you guys. But we could see additional volatility come through at that press conference here at 10:30. So something to be mindful of as we step later into the day here. Also, this just got added to the docket for the day. Trump is making or delivering remarks on health tech at market close today at 4 o'clock. So don't sleep on that. If you're in health tech companies, gonna want to be mindful of that before the end of the day. Getting a little bit of a rally here on the market. See if it's sustainable or not. IWM tapped that next level there, that 224.17. Look, off by a penny. If I give you guys lines to look at, I know it sounds silly, and some of you may not believe in technical trading or whatever. I don't just put these doodles on the chart for fun. They're here to help you. So if you're watching live and you see a blue line there, use them. Trust me. Put them on your chart. You're getting them for free. Worst case scenario, they don't work. But most of the time they work. And at least you can use them again as risk points, right? So if you were long down here, we ran to here, I should probably take profit or put a stop loss on or whatever, because that's realistically where we could reject. And if you break through with volume, you're probably going to push up even more, which is what you really want if you're long. Nice back test of the AEMA here on IWM, so that's good to see. Where's my market? SPY. I do have 637s open right now on SPY. I was speculating yesterday's drawdown was a little bit overstated. So I have those open, and I'm looking, again, as I mentioned earlier, I'm looking to get back in this range. So getting back in this range pre-FOMC wouldn't shock me. The movement here is actually a little impressive. I was not anticipating this by any means, and I said, unless we break it before 10, we're probably not breaking this, but hey, it's 10:20. I ended up being wrong. It looks like we're going to crack it. With some level of volumes decent here, ticking up a bit. Let's look at our 1 minute. Yeah, VMA is holding okay. 135K on the VMA on the 1 minute, so it's looking pretty solid. That's the area you want to watch up here. 637.58 to 638.04. If we break the 637.58, I expect to ping pong around in here before FOMC. Would not shock me if that occurred. IWM on that level again. Get a nice dollar pop here if IWM can hold it together. IWM was the weakness yesterday, so if we can see a little bit of a rebound here, that should theoretically give fervorance to SPY's rebound, or this directional move here. But I'm curious to see. Let's check on the Qs real quick. Yeah, I don't anticipate the Qs to participate today, mainly due to Microsoft and Meta reporting and my rotational speculation within the XLK. as it's now still proving to be true with Meta flat and Microsoft mostly flat, tiny rally here, Nvidia continues to grind higher. To me, this is looking like companies or stockholders are fleeing out of Meta or taking profits. So not fleeing, it's a little bit of a harsh word, but they're realizing gains or de-risking into earnings, and they're piling money into Nvidia as a safe haven, but still being exposed to tech here in the near term. So I want to see if that continues on the day. All right, guys, I'll be honest with you, my voice is already kind of fried, and this is the most excitement we've seen on the chart today, and I don't think I'm going to act on it and kind of practice what I preach here, like I said earlier. So we're going to leave this be, and I'll probably wrap up things here momentarily. I do want to remind you, I will be live tomorrow at 9:15. We're going to do This Week in Dumb Money, which is a segment brand new I'm very excited to talk about. And we're going to do an earnings rewind. So if you are long Microsoft, you're interested in knowing more thoughts on Microsoft, what they say tonight, and how it could impact their stock long term, you're going to want to tune in for that tomorrow as we rewind their earnings and see what the good, the bad, and the indifferent possibly are for Microsoft. So with that being said, guys, I think we're going to wrap it up here around the time I like to wrap it up anyway, around this 10:30 time. I gave you the areas to watch on SPY. You got this area to watch on IWM, so you guys know what to look for there. You're set up with volatility. You know what to look for here. Like I said, as long as it's sub 17 through 17.75, you're getting a volatility decay. You're getting a buy the dip environment. I expect UVXY to be pinned sub 1550 into FOMC. So far that has held and will continue to be true. And ideally, we want the VVIX to go down, but this isn't the worst thing here, that it's slightly elevated and it's 94. It's still good. As long as it's under 100, it's great. Like really great if you're a bull. So ideally, I want this to come down a little bit, but I don't hate it at 90, 95. It's whatever. Again, it's the volatility of volatility, so I'm not too shaken on that. So you know what to look out here, you know what to look for here, you know what to look for here. I think you guys are set up pretty good if you do decide to trade today. You got some thoughts on Nvidia, you got some thoughts on Meta, on Microsoft, and I think we have a good setup for tomorrow. You have an idea of what to look for on NEO if you want to take that. We also talked about some other names like GameStop as well. Got a decent little healthy show for you today. Lots of information. I hope you guys enjoyed it. Please do me a favor before I go and like the stream if you did enjoy it, and don't forget to follow, subscribe, all that fun stuff. And as I will remind you and continue to remind you, some say you will need an edge to trade. Well, I like to look at things from a different angle, and that's always what you'll get right here on the Atomcash angle. Have a great rest of your day, and remember, precision beats prediction every damn time. I will see you tomorrow at 9:15.
The time has passed, and that's a wrap.